17th of May. So quite okay. It could be considered as one of the busiest days of the week. Okay, at least from a bit of a data perspective. After all this enormous amount of data that we have seen the last 2 weeks, that's a bit more quiet one. But yeah, Tuesday is considered to. Sorry, Wednesday considered to be quite busy as well. So before I sum up a bit what's going on, what happened so far today, before doing some live analysis, and going through the pairs that you are interested in, I would like to do a quick briefing of what we have seen so far this week. So just a second, very quickly to send the push. Hello Abba, hello Manuel, welcome. For the attendees in the GoToWebinar, I will stick in the question box, guys. Also a link of YouTube, okay, which I'm now live. Just in case that you're struggling with your GoToWebinar access, etc. So let me just quick chat. Oops, no, that's not the link. Okay, I would like a confirmation from all of you whether you can see me, hear me, and etc. That there is no, there are no audio or visual issue. I can see a bit of a delay in YouTube, but I think you can hear me. So perfect. Okay, so we are good to go. No one has replied from the GoToWebinar, but I can see that it's capturing some sound. So I guess everything is fine. Okay, so we're good to go. Let me just scan a bit your question. Gold, dollar, yen, pound, yen. Okay, we could start with that one actually if you want to. And let me just share my screen. Perfect. I'll put that gold on, and we can start with a bit of fundamentals and how that impacted gold, which so quite significant decline yesterday. If I zoom in a bit, you can see that this is the daily candle, yesterday's daily candle, even though it stalled a bit. So basically, guys, yesterday's session and so far today's session has been dominated, let's say, from the debt ceiling limit in the United States. It has been is a big issue, especially for such a big economy such as the U.S. economy. So after having after Biden and the Congress leaders, both Republicans and Democratic, gave no sign yesterday of a result of a deal of a progress in regards to the debt the debt limit extension. The anxiety and the concerns around the U.S. economy has increased. So basically, think it like what literally means by saying debt ceiling is that they could easily run out of money by the latest June 1st. You understand that for such a big economy, this is for any economy actually, this is huge, leading to a bankruptcy. But this seems a bit unlikely for the United States. So, and this is something that has cut a bit short Biden's trip to Japan for the G7 meeting. It's monopolized the interest today because any progress in regards to the debt ceiling could ease a bit the fear for a projected X date of a default for the U.S. economy. There were a lot of factors that affected the markets yesterday. Sorry, but the concerns around that topic, it looks like it was the main one, and everything else just added on top of all these. And I'm referring to anything else. I'm referring to pretty hawkish Fed speeches that we've seen yesterday. Also, the corporate sector pressure the stock markets. So I would like to remind you a bit about Pfizer's bond sale. So bond sale up to actually historical bond sale, 31 billions, 31 billions. Also, Home Depot, if I remember properly, missed earnings expectations. Some layoffs as well. But yeah, Pfizer and the default issue in the US added further to the downwards the downward pressure for stocks. But also gold over here, since all of you are actually the majority of you keep asking about gold. It's like I don't know. It's like everyone is trading only gold. This is how I feel lately. But yeah, again, it had to do with the meeting of Biden and the Congress leaders, and there was an interesting statement as well from the leaders of 140 companies, U.S. companies, the big ones, J.P. Morgan, Goldman Sachs, and etc., that they highlighted, and I think I put that in our morning's article, that they said that if there is no agreement anytime soon, that would be a disaster for the U.S. Economy. So over here, gold. I'll put the intraday basis as well, so you can see the sell-off yesterday. We have seen gold nudging lower, as you know, other than the pressure and anticipation ahead of the meeting. Also, don't forget that precious metal is the best hedge against a potential disastrous default situation in the US. So down yesterday, steady a bit today. There are some hopes that today's talk could have in some kind of demand. So pretty uncertainty mode over here, stuck within the 1992 and 1983. Quite significant though is that it was a big candle yesterday, which at least for the near term, it could present some near-term pressure. So keep an eye intraday at least on these two barriers. So it's basically the high and the low of the day. You can see that momentum indicators are negatively configured. So this is the 1 hour chart gold. RSI 36, not presenting any sign of a recovery, flatten a bit, close to 30 territory. The MACD also negatively configured, well below zero, indicating that there is a huge selling pressure. But I remind you that this is just into the near term. So I'm in an hourly chart. So this might be just a bit of uncertainty ahead of a potential announcement for the from the United States and the default situation, the potentially disastrous default situation. So even though we keep saying that in the long term, okay, 2022 and 2023 are 2 years that gold remains on demand and remains in a rally. But all this uncertainty also has caused the pressure and the lower for gold. So keep an eye on the day, on the highs of the day and the low of the day, because a break of the 1983 territory, which is the low of the day, could extend some losses down to 1964. I would like to put the the 4 hour chart on, just because I want to show you that this very first support at 1976 coincides with this repeated floor, you see that all these fractals, 1, 2, 3, 4, 5, 6, 7, 8, 7, 8, yes, 8 fractals, all these it actually presents a strong support level in which the gold managed to sustain since 3rd of April. So this daily quite big bearish candle yesterday, breaking the 2000 handle, opened the doors to a retest of this repeated floor, which coincides with the first support of the day. But look at that, it also coincides with the 50-day moving average. So all the confluence of all these three things that I just mentioned, April's fall and May's fall. April and May's low, 50-day moving average, first support of the day. It makes this level even more important and even a stronger support level. So we might see a retest of that level, but we could see it struggling to extend lower. Okay. So with 50-day moving average is a support. It supported quite well the gold, to be more precise. So a fall below it could open the doors potentially to 1900, sorry, or even the 200-day moving average, but only a decisive and strong break, confirmed break of 50-day moving average. Okay, so other than that, I was saying, let me just double check your questions. Okay, what's your take? Let's see. Just before I reply to Lulama, guys, from all the attendees on the GoToWebinar, are you okay? Are you facing any audio or visual issues? Any questions that you want to ask? I cannot see any comments, so starting worrying whether you can see me, hear me, etc. Yes, wait, let's see. Okay, so what's your? Okay, let me just see the question. Where's my question? I understood it. So what's your take on the debt ceiling and what we can expect from the US dollar as it continues to strengthen against major peers? Okay, there. I'm not sure whether I can state my personal opinion, but definitely that could, for the time being, okay, let's take it step by step actually. For the time being, all this fear about the debt ceiling, it has caused some kind of a safe haven flows into the dollar, in contrast with gold, as you can see. So along, of course, with the hawkish Feds and the expectations of further rate hikes in June, and now the odds are also pointing to 40 points of rate hike in the next 2 months. So the scenario has changed a bit on that, on the monetary policy perspective. But yes, if I just focus on the reaction of dollar yesterday and today, it seems that the fact that the debt ceiling hasn't really sorted out yet, it has caused some safe haven flows to dollar, but we can expect from the US dollar at the condition. But okay, yes, an agreement. It could. We couldn't say that an agreement will spike dollar higher. Okay, because still still there is some pricing in regards to a cut of rate hikes by year's end. So that's providing a bit of a ceiling to the dollar. So I cannot obviously state like with clarity that you know what, dollar will move up or will move down, etc. But what can I say is that it has been in a safe haven flow the last 2 days ahead of this uncertainty. So some safe haven cash flows in the dollar, but it's still the 103 territory, 103 territory remains a key obstacle. So only a break above it could open the doors again back to February or March highs. Okay, so always combine the fundamentals with technicals just to give you a clear view about how the markets speculate, not only the debt ceiling, which definitely will ease a bit the concerns, but that could have a negative impact on the dollar, easing concerns. So let's get back to other assets, so cash flow out of dollar, etc. But on the backside, we also have constantly the last nearly a year, more than a year, constantly the banks. If we consider that the rate hikes are have already been priced in, the key question is when the market will start pricing in the cuts. Because if you notice since the pandemic, the dollar was ahead of itself, was ahead of the rates. So what I mean, it was ahead of the rates. We've seen a lot of pricing in for the rate hikes before the rate hikes happened. This is what I mean. So that's why I'm saying that let's wait to have some clarity from the depth, yes, but in the meantime, keep an eye on the 103 level. I will put my rectangle over here, okay? And why I'm saying that, from the flip side, yes, we had the nice rebound, even though it was consolidating close to 100 territory for nearly, actually 3 weeks, for nearly 3 weeks. And it was some kind of a rebound. However, can you see momentum over here? Momentum is still flat, neutral. So even though it was the inflation last week, which surprised us definitely, is the debt ceiling that, as I said, it boosted a dollar, but we also have not a sufficient recovery in the US economy. Labor market is still extremely tight. Inflation, the headline at least, still quite sticky. Not a significant progress in the manufacturing sector either, and plus the Fed. So there are some factors that keep some pressure on dollar. So yeah, hopefully that helped you, dear Lama. If not, let me know. Thank you, Belita. Thank you very much for your nice words. Guys, if there is anything that you want further explanation, let me know and I will get back, okay? So, we've seen gold. Just a quick return back to gold. I'm not sure whether no, we discussed about the support. We need a recovery above 20-day moving average in order to consider that we'll return to last month's highs. But just before I close the gold topic, okay, just to highlight that the Bollingers have flattened. Okay, that's an indication of consolidation. So we might see, if gold fails to break the key support that we discussed, okay, then it could continue consolidating between the 50-day moving average, or more precisely, yeah, 1970 to 2050. It's a range that has been seen for the whole April and May so far. Okay, so someone type gold at, where is it? Gold is dropping to 1960. Okay, you mentioned 1960, dear Sibusiso. So yes, we could see the testing 1960, but I need further confirmation, to be honest. That's a key support. So it could retest 1960, but it could quickly return back. It depends if something like really surprising happens that could lead down to 1960. But yeah, we need a break of 1976 for sure, and not only a break, but to sustain and move below it in order to start to confirm, let's say, and move further down, and that could open doors not only to 1960 but way lower, such as 1915, 19,000, as I said, and etc. Because it will look like a free fall. So that's not the case so far. Okay, we need further. We need further because the overall momentum, the daily, weekly, the long-term momentum and the medium-term momentum remains bullishly biased. So yeah, intraday is the increasingly negative momentum that could retest, as I said, 1976. So 1960 might be a bit far away if it doesn't sustain and move lower. Mohammed, gold going up steady for the time being. As I keep saying, indeed the overall outlook for the year, because I know that you're more of a long-term trader, remains positive, unless if we have this move that I discussed earlier. I'm breaking the 1970 territory. Okay, remove those indicators. Oh, sorry, Backwell. Okay, this is a bit busy indeed, but this is my 5 and 9 exponential, 9 and 5 strategy. So let me just, you might prefer a price, you might be, I don't know, are you a price action trader or something? But that's still the case. That's still the case. Okay, I noticed that is in an up channel as well, broken that yesterday. I forgot to mention that to you earlier. But still, this floor is very much visible. So that would be the confirmation of a new downtrend in the medium term. Okay, this is the daily chart. Please reply. Are you there? What do you mean? Where am I? I don't get your question. Where am I? I don't get your question. There's no question here. Please clarify. How can I help you? Dollar yen. Yeah, let's move on. Dollar yen is one of the assets that benefited in general the last 5 days. It used to be, I think I showed you that last week. I'm not sure, but yeah, I definitely did. I had this lines on. So it's in an upwards movement since March. Holding a nice floor. By connecting the lows, you can have a nice floor as well over here, coinciding with the 50-day moving average, And we had also this cross, bullish cross of 50 and 200 moving average. They bullishly crossed. They were clashed at the beginning, but now the gap between them is expanding as an indication that bulls are in control, and any pullback, any pullback retesting the lower trend line is just a higher low. Okay, down, rebounded, extended into a new high, a bit of a correction, again boosted, oversold a bit, so you return back to the channel, rebounded again. We have 1, 2, 3, 4, 5. Okay, that's 4 consecutive days to the upside, and so far today remains to the upside. Dollar yen. So 135 has 137 has already breached. Okay, has already breached. So the next levels to be watched for dollar yen is mainly the highs that we had seen back in May, beginning of May and February. So the 137.75 level, 76, which also is a breath below the third resistance of the day. Okay, that's the next resistance area for dollar yen. Momentum is keep rising. We had also, sorry, I forgot it. We had seen an expansion of Japanese economy overnight. The GDP this morning, if you were following the news, or if you had seen our articles, so. Where is it? I lost it. Yeah, here is it. 0.4% for the first quarter of the year. So that's a 0.4% growth compared to just the 0.1% that was expected. So 4 times more than what was expected, with the year-on-year also, the headline also presenting a nice growth to 1.6%. You can tell me about this as good news for yen, right? And indeed, that's truth. But on the flip side, this is dollar yen. So we had a strong yen, but we had also a strong dollar. So, and it's a safe haven as well. Elsewhere, actually, in general, yen crosses since yesterday night have been the biggest movers, if I remember properly. Yes, I do. So dollar yen to the upside. It was Swiss yen as well, pound yen as well. Do I have it over here? No. No. Trying to find pound yen and Swiss yen. Probably I have cat yen over here. No, I don't have it. Let me just find it, guys. Yeah, pound yen also is a daily chart, but it's in an upward trajectory since March. So in general, in the second quarter, it has been in a rally with momentum. Can you see how massive is the positive momentum in pound yen? So uh, so it has to do always with the fundamentals, the huge yield differential, the huge difference that Bank of Japan has with the rest of the banks is the main driver of these upwards movements for pound yen, euro yen, if I'm not mistaken, dollar again as well. Okay, so but yeah, Japan economy shows some stronger than expected growth. So GDP, as I said, jumped. So that shows that, well, that shows, okay, why it could be witnessed as negative for yen. It's not negative for yen, okay? It's not negative for yen for sure. It's just, it was announced at the time that we have seen cash flows into dollar with the debt ceiling, with the corporate sector selling bonds, historically sell off of bonds, with what else? What else? What else? And a very around and uncertainty around all the major central banks as well, including Bank of Japan. But um, uh, but if the debt has cleared up today, if it does, if they show some progress or a deal today, we could see the dollar yen and the yen crosses corrected a bit. Okay, but as I said, the GDP growth, it was good news for the yen. Okay, not because it was a growth, not because only because it was suggested a recovery, but it shows that Japanese economy recovered from the technical recession. So this is the most important part, the most important signal that we got from the Japanese GDP. Japan's economy, we know that Japan economy did experience a technical recession. Okay, then in the second half of 2022, but with lifting, lifted back then, they lifted the COVID restrictions as well, along with China. There was a falling oil prices, helping to push consumption, domestic demand bouncing back. So it starts showing some recovery since last year, the second half of last year. But this is after this data this morning, it shows that the GDP expanded once again at the start of the year as well. So regardless of labor shortages, there is an improving demand. And a broader, wider recovery in Japan. But yeah, uncertainty remains on the Bank of Japan, especially with the new governor. Okay, so that's the issue. Even though they held policy unchanged, the governor with the new governor, this might things might change soon, because there are a lot of speculations that the Bank of Japan will start to normalize policy. Okay, so that will remove, it will leave ultra accommodate policy behind. Yeah, that's something that could help yen against dollar. So okay, for the time being, nice support on dollar yen. Momentum is in an upwards channel. Momentum on the same side as the uptrend. Bullish cross from moving average. So from technical perspective, buying pressure is still on, with the next key handle at 137.76. And for all those that are interested for intraday basis, scalping and whatever, we have seen a consolidation the last 5 hours. So reach and break the first resistance of the day and the significant 137 level. And now it turned a bit lower, but that looks to be just a correction. So moving average, the 5 and 9 exponential moving average flatten. Stochastic, you can see that it, can you see that actually? Let me confirm that you can see it. Yes, you can. The stochastic, which is the only one that I'm using as for the intraday basis for a fast environment such as 1 hour or 30 minutes charts. So can you see bearish cross and extended lower and keeps pointing lower? This is an indication, so we might see further pullback, but just in the near term, just in the near future, next few minutes, an hour, So there is the need of a correction apparently, but it remains overall to the upside, as you can see from the rising momentum. So what that's supposed to mean? We saw a jump. We might need to see a bit of a consolidation, correction, like what happened here or here, before another attempt to the upside. Okay, so keep an eye on, I will say first resistance of the day, but I want to be sure. So that would be, yeah, 136.70. Keep an eye on the 136.70 confluence of my latest up fractal and also the 50-day period moving, the 50 Fibonacci level, the mid level, let's say, of the rally that we have seen today. So as long as the asset remains above this level, that would be an indication for buying the dip eventually. Okay, because momentum overall is still bullish, and this looks to be this flattening of this slight pullback looks to be just a correction. Pound yen. Pound yen. Should be something similar. Yeah. You know what? Let's start with daily. I'm putting this on purpose because it looks like a flag. Not a confirmed one yet, but a flag. Or a pen. No, flag, not a pen. Flag. Flag. So rally up, 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 right? And the last 2 weeks, nearly 3 weeks, something like a flag. So what we need over here, we need a confirmation. Yesterday, it struggled and provided this doji candle on the top of the flag. Today is moving above it. So a bullish closure today could indicate, so a bullish close implies to a breakout to the upside of a flag, something that indicates a bullish signal. Okay, so keep an eye on tonight's closure, because this will initially signal a move up to 172.30, and if it sustains the move to the upside, we might see extending further higher and providing fresh highs that we have never seen since 2015. Okay, so yeah, in general, the long-term outlook is positive and the medium-term one. So daily, weekly, monthly, pound yen is to the upside. There is no sign of this long-term uptrend to run out of steam. That's in the long term. And there are plenty of things that there support this um, this outlook, let's say. But I would like, okay, 15 to 100 and the 20 also all moving average are pointing higher. Bollinger's expanding higher. MACD is way positively configured. RSI above 60. And I would like to drive your attention on the 60 level, on the RSI, sorry. See, even with some small corrections in the near term, okay, regardless of this small correction, it remained above 50 since March, mid of March. Okay, so despite the sharp pullback that we have seen twice in April and another once again in May, despite this big sell-off that we have seen, the RSI held about 50. So that's another indication that still bulls are in control. Okay. Um, or if you need, you can, I don't know how many of you are using RSI also as an exit signal, but if it keeps posting higher lows, you can connect the lows like I did over here and have it in mind for a potential exit signal, exit point of your long trade. So intraday now, yes, nice. Nice. 1, 2, 3, 4 consecutive hourly candles breaking, actually breaking this latest up fractal, still below the yesterday's fractals, but outside Bollingers. Bollingers have flattened though, so that suggests consolidation. Let's see. This consolidation it is, but the fact that we keep having the body of the candles, even though the bolts have flattened, MACD has flattened as well. The fact that we have stochastic keep pointing higher, RSI keep pointing higher, you see that? Stochastic bullish, MACD flat, RSI bullish, MAs point higher. So regardless of the flat Bollingers, all the rest suggest further move to the upside, at least for the near term, for the next few minutes or hours, as I said. So rich and broken yesterday's latest up fractal, outside Bollingers. So next resistance is at 170.95. Then the very next one, just in case that it breaks the 171, it will be another 60 pips higher. Okay, so there is intraday, there are intraday bulls pushing the price to exit this 170 range. Gold and the yen, that's the only things that you're asking, guys. No other questions? Oh, euro dollar. Someone asking, oh, Ratile is asking about euro dollar. Perfect. Perfect. Yeah, so let's touch a bit eurozone, because we said about Japan, we said about the US, but we didn't say anything about Europe. And we had actually many mixed comments from ECB members. So it was Sturnaras yesterday. He's always dovish, so nothing changed. He keeps his dovish stance. But this morning we had ECB's Holzman indicating a push for deposit rate above 4%. So hawkish talks once again for Eurozone. Even up to 50 points, rather than 25 for June. That would be a big surprise. As he said, as things are currently, that is to get to the level we need to be at the deal with inflation. So pretty hawkish commentary from Holzman. It was inflation as well. It was inflation. Do you have the calendar? Let me share the calendar as well. So just a quick reminder. Here we are. Sorry. Here we are. So, as my dearest colleague Marco said earlier this morning, a pretty sticky one. So, a tad lower, the harmonized one, the monthly one for April, but you see that core, the headline for core, core for the monthly as well, they just remain unchanged. So what that's supposed to mean? Uh, it means that there are more things to be done. I mean, this is still a really high numbers, especially with the breakdown. Okay, we cannot see the breakdown over here, but usually, not usually, always the governments are providing a breakdown of the inflation. So food price inflation and etc. So even though we've seen a bit of a deceleration on food, it remains extremely high. Okay, it remains high. Still a high reading. That's another indication. That's another card, hawkish card for hawks in ECB. That's another indication that ECB should remain on course for additional hikes. That's pretty much it. I mean, it's crystal clear. Um, uh, there might not be even a debate in regards to whether they will increase or not uh, the um, the rates. So let's just take that back. So technical analysis for euro dollar. We had a dive to 108.20, steady for the time being. However, you can clearly see that all momentum indicators suggest a further intraday pressure. So there's still selling pressure. Sorry, I'm getting a bit tired. We still have housing starts and building permits in 40 minutes that could affect the euro dollar, but but euro dollar remains bearishly driven. This is not something new. This is 9 days in a row. Nice smooth downtrend, breaking the 50-day moving average and pretty much opening the doors to 107, 108 preliminary and 107 territory. So yeah, yep. What else I wanted to say about Eurozone? Let me scan a bit my bullet points. So it's pretty much is all this is this key question for ECB's higher for longer story. This is not something that we have used to from from ECB at least. Yeah. Let me see your questions, if there are any further questions. So my dear friend Oratio, you see clear downtrend, 1, 2, 3, 4 days in a row below 50-day moving average, posting some lower lows. So there is no there is no recovery for the time being. RSI at 40, stochastic oversold, MACD neutral. So there is a significantly selling pressure for euro dollar. We might see a bit of some spikes or further decline on the data open soon and on the US housing stats and building permits. So remains on the lows of the day, bouncing between the first and the second support of the day. Yeah, but more negatives than positives over here. All these origins in gold. We've seen gold. I'm not gonna go through it again because it's pretty steady. So 4-hour chart euro dollar. Yes, why not? What we have? The latest 4-hour candle clearly showing nice look at that. Nice call, volatile. Yes, the 4-hour chart could help you significantly because look at that. Actually, let me just clear a bit this mess. Let's keep it a bit simple. The 4-hour chart presented a nearly full body bearish candle. Can you see that? Small tails, insignificantly small tail higher, nearly a full body candle, breaking yesterday's lows, posting in a fresh lower low with MACD presenting an increasing bearish bias. So it's pretty much stating that further bearish bias for the near term. The 4-hour, we have a nice bearish cross since yesterday between the key moving average over here, and they keep expanding. Can you see that? The gap is getting higher and higher, wider and wider. That's an indication that in the near term, intraday, for the next few days, bears remain in control. It's already down. TR Paul gold is already down, a bit sideways. But yeah, as I mentioned earlier, keep an eye on the 1976 floor, key floor for the. You're all trading gold, aren't you? Mohammed, gold is not going up. There is actually a pullback sell. Don't give advice, Barry. You might. Oh, my Mohammed come back and said to you, you told me to sell, but I went otherwise. Don't give advices. Do whatever looks reasonable for you. But yes, as we said earlier, there is some intraday selling pressure. So that's why this floor is so significant. It's a very strong support level, which might be retested, but we might see a retracement. The break of that level, the 1976, could open the doors to further to the downside and to potential development of a new downtrend. Let's wait and see. Mina, you keep asking guys about gold, but I have covered and I spent nearly the 50% of this session to gold. So as soon as I close the session, you can drag and drop, go back to the beginning, and you can see the full analysis on gold. So if there are no further questions, yes, I'm gonna call it a day. Even though actually I have one more question. Aussie. Yes, let's check Aussie. Antipodians were in focus this week. Just so I have Aussie from Emily. So dear Emily, these bounds look temporary. So this is the 1 hourly Aussie. I will add also. Actually, firstly, I would like to drive your attention to this double top. Okay, and then, my dear Emily, this bounce looks a bit limited. Why is that? Because the RSI and MACD remain below neutral. So this bounce looks a bit limited. It looks that it could run out of steam soonish. Stochastic entered the overbought territory, sorry, over here. MACD remains steadily to the downside. RSI is at 50. So regardless of this bounce, it managed to point further to the upside. the asset is below the pivot points. So considering the stochastics and the bullish cross of moving average, we could see it retesting the pivot point. But as long as we don't have further no, there is at least another hourly candle above it pointing higher, then this is not expected to, we are not expecting to see a return to the upside for dollar, for Aussie in general. If I'm not mistaken, this should also confluence with 50%. Yes, I'm right. So yeah, it's a key handle, a strong resistance area. So we might see the asset retesting it before pulling back lower. Okay, you see that is a 50 period moving average, is the latest up fractal, it's the pivot point with RSI and MACD pointing to a limited bounce. And consider also the overall picture, which has kept Aussie uh, um, at the lows of the year, consolidating mainly the last 3 months, March, April, May, so 2.5 months below the 200 moving average, and the sort of not 68 and not 66 territory. Pretty the overall outlooks presents that the Aussie will be kept within this range. Okay, so yeah. Okay guys, if there are no further questions, I'm gonna call it a date. Oh, Chomari, as I said, I will, as soon as I close the session, you can go back and check it. Actually, the full length of this session was about gold and yen crosses. So give me give me a second to scan it a bit again, my bullet points, to see whether I forgot something, and I will close the session. And you can drag and drop your cursor to go back and check the pound yen and the dollar yen cross. But as I said earlier, just to summarize a bit, remains to the upside both in the near term and in the medium term as well. Yeah, that's pretty much it, guys. Attention for it's in the US Open. Housing starts and building permits in half an hour. Any news, any headlines coming from Mr. Biden and the leaders will dominate the attention for sure. So I'm gonna call it a day. Thank you very much for attending. Take care. Have a great day ahead, and see you again possibly on Friday. Thank you. Bye bye.